It's pizza time because Mangalam joins us. Mangalam, Jubilant Food works dream run in the last couple of trading sessions. We have a brokerage note at least to attribute to.
Indeed, Nigel, a brokerage note that comes in from Deutsche Bank, and they've upgraded the stock from hold to buy with a target price of 1,500 rupees, which implies a 30-35% upside from current levels. The reason is that they say the recent correction that we saw in the stock before the rally that we saw a couple of days ago is primarily the big attribute or something that that gives them comfortable margin of safety as far as the stock is concerned, because it's been flat for the last 5 years too. And they've interacted with a lot of the food tech QSR companies, and they believe that the competitive intensity is waning. But we need to keep in mind a few things. Now, Deutsche Bank projects SSSG growth of about 7% over the next 3 years, and at the same time they forecast the company to deliver earnings growth at a CAGR of 32% over the next 3 years. Now, we'll have to keep that in mind with the last few years that has taken place in the company. So over the last 5 years, if you look at the same-store sales growth trend, it has fallen from 30% in FY12 to as low as 3.2% in the previous fiscal. So 6-7% in that is something that we need to watch out for. And additionally, the EPS growth of 32% that they're talking about, if you look at the last 4 years, the EPS has actually fallen by nearly 6% on a compounded annual basis. So these are two things we need to keep in mind. And even if the 32% EPS growth does come by, the stock would trade at 30 times or rather 31 times FY19 earnings. So the valuations are another thing that we need to keep in mind for Jubilant Food. However, they've given an interesting breakdown for the valuation because they believe that the mature companies or the mature outlets of Domino's are the ones which are valued, and the ones which are still to grow are not yet fully captured in the valuation. They have a few assumptions. Raw material prices would increase and the company would offset by taking price hikes, and at the same time they're looking to premiumize the portfolio. But again, I remember the management telling us that they are not looking to hike prices or premiumize portfolio in the near future. So we need to keep these things in mind, but nevertheless, interesting comments coming in from Deutsche Bank.
Well, thanks Mangalam for that. Anisha